Hello everyone. In this video, I'm going to discuss paper 2 of the NET exam, NET JRF UGC NTA economics exam. Now, this is September 2020 exam. So let's try and understand the exam pattern that came in September 2020. Now, you have to be very clear that, while you are attempting the papers, the past years, you should look at two things. One, you should look at the pattern. What are the kind of questions that are asked in exam? Whether it is match the following, whether it is comprehensions, whether paragraphs are given to you, whether numericals are given to you, what kind of numericals are given to you. That's the first thing that you should look at. The second thing that you should look at is the topics and subtopics. So for example, we want to understand whether the question that is being asked is from microeconomics, macroeconomics, etc. And if I take microeconomics as the broader category, then I should be able to distinguish whether it is from game theory, whether it is from externalities, whether it is from price ceiling, price floor, whatever the question is from. So or externalities, you can also think of that as public economics. So you have to understand very clearly the topic and subtopic, which will help you prepare those topics in details. So if I know that there is a question which is being asked from public economics externalities, then I understand that externalities is important. I understand that when I'm going to talk about externalities, I have to read through the Cost theorem. I have to read through what is how is the deadweight loss related in externalities to the tax rate. I have to read through various things. So therefore, you have to clearly write the topic and subtopic for each question. Let's go to the first question. The first question says match the following. So that's the first pattern identified. Then list one has effectiveness in private market in dealing with externalities, relationship between increase in tax rate and tax revenue, dominant strategy, controlling prices through effective price ceiling and price floor. This is clearly the main topic is microeconomics. If I go into the subtopics are externalities. The subtopics are, market because we talk about price ceiling, price floor. The subtopics are game theory. Now let us go through the question and match them. So it says effectiveness in private market in dealing with externalities. How do I ensure that there is effectiveness? I can ensure effectiveness only through my Coase theorem, because Coase theorem suggests that you can actually give property rights, and by giving property rights, you can actually go ahead and ensure effectiveness even with externalities. So that the answer for the first part is Coase theorem. Now, Coase theorem is also one part of environmental economics because it describes the economic efficiency of economic allocation in the presence of externalities. So Coase theorem, you should also therefore write somewhere that you should go through environmental economics Coase theorem topic also, which means just the examples from environment economics. Now let's go to the next part. So Coase theorem was about property rights. So property rights is important for you to understand. The second B part is relationship between increase in tax rate and tax revenue. Now, this relationship is given by the Laffer curve. The Laffer curve is again a part of public economics. You should do that. So, broadly, it was something which was developed by supply side economist, and the economist's name was Arthur Laffer. It shows the relationship between tax rates and the amount of tax revenue collected. So to be very precise, how does the Laffer curve look like? Let's understand. The Laffer curve looks something like this. where you have the tax rate here and you have the tax revenue here. And it suggests that, as you keep on increasing the tax rate, initially the revenue will increase. But after a point of time, the revenue will start decreasing because people will have nothing. All their income they're giving as tax. If they're giving all their income as tax, they have no incentive to work. If they stop working, automatically they will stop giving you tax. So the revenue collection will decrease. So, here, wherever the revenue collection is maximum, this is your optimal tax rate. This is also important, that the Laffer curve helps you to find the optimal tax rate. Let's go back to the question. So the next question, okay. The third part is dominant strategy, definitely a concept from game theory. So you should understand what is dominant strategy, what is dominating strategy, what is dominated strategy, what is a strategy for that matter. Controlling price through effective price ceiling and price floor, that is definitely deadweight loss, because whenever you do not allow markets to function on their own and you introduce, so if I allow markets to function on my own, this is the price that I achieve and this is my consumer surplus and producer surplus. But if I do not allow markets to function on their own, then what really happens is that either I put a price ceiling or I put a price floor, which leads to some part of this becomes my deadweight loss. So you will have some part as deadweight loss. So the answer is deadweight loss. So therefore the answer to A is C3, B1, C is 4, and D is 2. Let's go to the next question. The number of districts initially selected from states under the Intensive Area Development Program 1960 are. Now, this is the kind of question which comes from Indian economy. Again, something that I will give you as part of the notes. However, one suggestion that I would have is to go through all the programs that are launched. If you're doing it on your own, then you should go through all the programs that are launched by the government. Now, this intensive area development program was also known as the package program. This was launched for Kharif, and the main reason was to increase the agricultural productivity. Agriculture overall is a very, very important topic from the point of view of any exam, because it has the majority of employment, right? And it has been, India has been an agricultural economy. So you have to understand that from the point of view of IES, IAS, UGC, what all those exams requires the concept of agriculture in detail. Now, so this is something which I'll give you 2 to 3 pages on. So this is from Indian economy. Let's go to the next question. Question 3. Arrange the following economists in chronological order when they proposed their theories. Okay, so it is Harrod, Schumpeter, Rostow, and Solow. Now this, I will say, is a question from DE, which is development economics. Now, sometimes I suggest my students, if you do not remember all the economists, I suggest them to go in the order of the theories that they have read. So, I don't know, supposedly, I don't know whether Harrod came first or Schumpeter came first or what happened. But I know very well about what theories they had. So, for example, Schumpeter was the one who actually initiated things. Schumpeter, was one who brought his book in 1942, And it was about capitalism, socialism, and democracy, and it was about a dynamic economic growth, which he called, and this is an important word, creative destruction. So, he was the first person to actually go ahead and talk about, not the first one, but among these four, he was the first one who started and who talked about evolving and who talked about new markets and who talked about new products, etc. After Schumpeter gave his theory, you know, Harrod-Domer, if you go ahead and look at the Harrod-Domer model, the Harrod-Domer model is basically a Keynesian model, which went ahead and which actually not only talked about investment or only talked about capital, but it also talked about savings. It talked about why there is no reason for the economy to have a balanced growth. And this served as it served as a basic for the solo swan model. Now, Rostow, on the other hand, talked about, he talked about how you move from a transactional or a traditional phase to a transactional phase to an innovation phase. So he talked about the various phases. Harriet Domer talked only about capital and savings. Rostow went ahead and talked in detail about what are the different phases that you have as stages of the economic growth, and he gave his theory in around 1960s. So ideally uh, the chronological order in which they would be there would be Schumpeter, followed by Harrod, followed by Rostow, followed by Solo. So it will be B, A, C, and then D. Let's go to the next question. So you understand now that there is a question on chronological order, and there will be questions on that. There are questions which talk about Indian economy. Specifically, you should talk about all the programs in the agricultural sector. There are questions which talk about match the following. Let's go to the next question. The next question is, what is the maximum penalty to be imposed under Negotiable Instrument Act for bouncing a check? Now, this is a question from MFM, Money and Financial Markets, which is another field of economics. So, the maximum penalty for bouncing a check is 2 years, something which is also a part of general knowledge. Let's go to the next question. The next question is again from microeconomics, but it's a numerical. So, question 5, microeconomics numerical. Question 4 was MFM. Please keep writing those down so that when you're reading microeconomics, you don't have to go through all the papers, all the questions, but this is the question that you should directly jump on to. So, question 5 talks about total revenue, total cost, and it says which of the following is correct. Let's just do this question once. So it says total revenue is 1400Q minus 6Q square. Total cost is 1500 plus 80Q. 1500 plus 80Q. At Q is equal to 100. And what does it wants to understand? What happens and which of the following is correct? So let's find out marginal revenue. Marginal revenue is total revenue differentiated with respect to output, which is 1400 minus 12Q. Marginal revenue at Q is equal to 100 will be 1400 minus 12 into 100, which will be 1400 minus 1200, 200. Let's talk about marginal cost. Marginal cost is when you differentiate the total cost with respect to Q. When you differentiate it, this is constant. This gives you 80. So you have this as 80. Clearly, marginal revenue is greater than marginal cost. So, you know, marginal revenue is definitely greater than marginal cost. And we also found out that marginal cost is 80. So that's also true. So this is also true. And the other two are not true. So the answer is both A and B are true. Okay, let's go to the next question. Account pay crossing is defined in which section of the Negotiable Instruments Act? Go back and check that there have been 2 questions on the Negotiable Instruments Act. So this shows that this is an important topic and you should be focusing on this topic. So let's go ahead. So section 123. Section 124, section 125, not defined in NI Act. So accounts pay crossing is something which is not defined as part of the NI Act. Let's go ahead to the next question. Now, this is another very, very important pattern which is followed in the exam. This pattern is assertions and reasons. See, let's understand this first. See, it's a question again related to microeconomics because it is talking about contract curve. It is talking about the general equilibrium. This is general equilibrium topic, right? So assertion. It says compared to a certain point on the contract curve, a point above the contract curve is efficient. This is something that it is claiming, which means let us understand what it is claiming. It is saying that supposedly this is my Edgeworth box. This is OA, origin for individual A. This is OB, origin for individual B. Then this says that if you plot a contract curve where, you know, I have, what is a contract curve? A contract curve is wherever my indifference curves will be tangent to each other, wherever MRS, you know, assuming that my indifference curves are well-defined indifference curve, then where MRS individual A is equal to MRS individual B, that's my Pareto efficient points, and joining the Pareto efficient points gives me the contract curve. Now, this is saying that compared to a certain point on the contract curve. So suppose I take this point on the contract curve. This point is Pareto efficient. Then it is saying that a point above the contract curve, which means a point like this, is more efficient. The answer is no. Because when you go from a point like A to a point like B, individual A's utility is increasing because you're moving to a higher indifference curve. You're going away from the origin, but individual B's utility is decreasing because for individual B, this was more away from the origin and this is less away from the origin. So B's utility has decreased. You have gone to a lower indifference curve, but A's utility has increased. Therefore, both of them are Pareto efficient, but we cannot say that B is better than A. So the statement is wrong. Reason. The contract curve represents the locus of points where MRS between the two goods is same for both the individual. That's correct. The reason is correct, but the assertion is not correct. So the answer is that A is not correct, but R is correct. Let's go to the next question. Growth rate of population is, this is a question from development economics. So what is growth rate of the population? The growth rate of the population is the rate at which population increases per 1,000 annum. So the answer is A. The next question again is from microeconomics, and this question is related to the production theory now. So it says for the production function, Q is equal to A L to the power alpha B K to the power beta. What does this represent? The coefficient A shows managerial efficiency. This is the first point. Alpha plus beta greater than 1, then production function exhibits increasing returns to scale. Marginal rate of technical substitution is given by beta k upon alpha L, and marginal product of capital is given by beta q by k. Let us try and solve this part. So first, let's understand some of the features of this function. My production function shows functional relationship between input and output. So my production function here is given as Q is equal to A K to L to the power alpha K to the power beta. This part here in any production function is for technology or any additional efficiency, etc. So the first point is correct, that it shows managerial efficiency or it shows technological part. The second part talks about the increasing returns to scale. Now, although people who know microeconomics can just judge and tell that the answer is yes, the statement is true, but let's try and see why. See, increasing returns to scale happens when you double the labor and you double the capital and output also doubles. That's constant returns to scale. When you double the labor and double the capital and output more than doubles, then that's increasing returns to scale. When you double the labor and double the capital and output less than doubles, then it is decreasing returns to scale. Need not be necessary that you are doubling the labor and doubling the capital. You can multiply by any factor T or any factor K. So let's try and see what happens in this case. My function is Q is equal to A L to the power alpha K to the power beta. Let me just double my labor. If I double the labor, it will be 2L to the power alpha 2k to the power beta into A. This will be 2 to the power alpha into L to the power alpha. This is my new output. Okay, so I'll write this as Q dash. This is Q, sorry. I can write this as Q dash when I have doubled the labor and doubled the capital. So new output produced is Q dash. So this is 2 to the power alpha, L to the power alpha, 2 to the power beta, K to the power beta. This is, I can take 2 to the power alpha into 2 to the power beta out into A into L to the power alpha into K to the power beta. Notice what is this? This is your old level of output, right? So new level of output is 2 to the power alpha into 2 to the power beta into the old level of output. इतने से output बढ़ेगा. This is the amount by which output will increase. Now it's very easy. When base are same, power will get added. So this becomes 2 to the power alpha plus beta into Q. When alpha plus beta is 1, this becomes 2 into Q. So output, new output is double of old output. So this is constant returns to scale. When alpha plus beta is greater than 1, then this is like, suppose alpha plus beta is 3. Then what will happen? Then this will be 2 to the power 3. 2 to the power 3 is 8. So it will be 8 times Q. So new output is 8 times the original output. Labor capital को सिर्फ double किया, output 8 times हो गया. So which is very high. So this becomes increasing returns to scale. And when alpha plus beta is less than 1, suppose this is just 0.5. So new output is root 2 Q, which is 1.4 times Q. It is less than how much labor and capital increased. So this is decreasing returns to scale. In summary, whenever you see a function like this, if alpha plus beta is 1, it's constant returns to scale. Alpha plus beta greater than 1, increasing returns to scale. Alpha plus beta less than 1, decreasing returns to scale. So this statement is correct. Let's go to the third part. Marginal rate of technical substitution of L for K. Now, MRTS, marginal rate of technical substitution, is given by MPL by MPK. Now, this is very important. Understand this. When my function is a L to the power alpha, K to the power beta, then marginal product of labor is how output changes when labor changes. You differentiate it with respect to labor. This is A into alpha L to the power, I've differentiated with respect to labor. And this gives you A into alpha into L to the power alpha minus 1 into K to the power beta. Similarly, marginal product of capital will be how output changes when capital changes. This will be, you differentiate this function with respect to K. So when you differentiate it with respect to K, you will get A into beta into L to the power alpha into K to the power beta minus 1. So, MPL by MPK will be A into alpha into upon A into beta into L to the power alpha into K to the power beta minus 1. This will be, alpha into K upon beta into L. देखो यहाँ पर अल्फा माइनस 1 है, यहाँ पे अल्फा है, सो सिर्फ एक एल बचेगा, बाकी सारे एल वुड गेट कैंसल्ड. Here you have beta, here you have beta minus 1. So all k's will get cancelled, just one extra k is here. So you will have k by L here. Go back and check that it says beta k by alpha L, whereas the answer is alpha k by beta L. So the answer is wrong. Okay, and this is here, here also you should write LK. Now, once you have done that, the third answer is wrong. Let's go to the fourth part. The fourth part is marginal product of capital is given by beta Q by K. Marginal product of capital. Let's go back and check. We just solved for marginal product of capital, which was this. Let's rewrite this part. So, this is marginal product of capital. When I differentiated this with respect to this becomes A into beta into L to the power alpha into K to the power beta into K to the power minus 1. Do you agree? When base are same, power will get added. If power gets added, it will be beta minus 1, right? So I have just written this as K to the power beta into K to the power minus 1. You can do that. So for example, if I have to say what is 2 to the power 4, it is nothing but 2 to the power 5 into 2 to the power minus 1, because this is nothing but 2 to the power 5 upon 2, which is 2 to the power 4. So that is what I have done. So K to the power beta minus 1 is K to the power beta into K to the power minus 1. Now, I'm going to write this as A into beta into K to the power alpha, into L to the power alpha, K to the power beta upon K. Last step, multiply and divide by alpha. Notice that this thing here, oh, you don't have to do that also. Sorry, that is not required, multiplying and dividing by alpha. So notice that this part is y. A into L to the power alpha into K to the power beta is written as y. So here what I'm going to do is this part, A into L to the power alpha into K to the power beta, I'm going to write this as y into beta upon K. So this becomes beta into y by K. So that is the marginal product of capital. Similarly, now just look at the pattern and tell me what will be marginal product of labor. It will be alpha into y by L. Important question. What is y by K? Isn't this average product of capital? What is y by L? Isn't this average product of labor? How, and on an average, how much each labor is producing? So you can go ahead and replace this part by beta into APK, alpha into APL. So if the question would have been that the marginal product of capital is beta times average product of capital, the answer is correct. Marginal product of labor is alpha times average product of labor, answer is correct. Okay. Let's go to the next question. The next question is labor force participation is given by. This is a question of macroeconomics. To be precise, this is a question you can read Blanchard, chapter 6, which talks about the labor market, or you can also go for an Indian author. So labor force participation is always given by the number of people who are in the labor force and not by the number of people who are in the population. So let me explain what does this mean, and then we can go through this question once. This is actually a little congested, so I'll also explain you what answer should be there. Okay, so now what happens really is the following. You have something which is known as population. You can refer to my lecture on labor market for this question. Okay, the population is divided in two parts: people who are willing to work, which is called labor force, and people who are not willing to work, which go out of labor force. Labor force participation rate is the number of people who are willing to work, which is labor force, upon the total population. Now, out of the labor force, again, there are people who are unemployed, or there are people who are employed. The employment rate is nothing but number of people employed upon labor force. इसके हमेशा एक ऊपर वाले से divide करना. So labor force is divided by population, employed is divided by labor force. Unemployed is again number of people unemployed upon total number of people who are looking for job, which is labor force. So this becomes the unemployment rate. So now you can give the answer for the labor force participation rate. So the labor force participation rate is labor force upon the population of the total population into 100. So answer is 3.